I mentioned, yeah, nobody. Okay. I guess we're live, right?
I guess we're live. I see
Yeah.
it counting down.
I mean, we're still waiting for one speaker, but let's just start and hopefully he could also join us. So welcome everyone to our webinar, Unmasking Fraud, a behavioral approach to client screening. Thank you all for taking the time to join us. With digital transaction forming the backbone of current e-commerce, move from physical to virtual interactions has been both rapid and extensive, partially influenced by global events such as COVID-19. Non-face-to-face interaction and verification has quickly become the norm for opening new accounts and transacting across the internet. Onboarding customers and also approving loans or investments. However, these remote processes have also introduced a new layer of risks. Traditional defense mechanisms like static KYC checks and verifications are increasingly being unmaneuvered by complex social engineering tactics, synthetic identities, and even deepfake technology. As fraud continues to grow and evolve, organizations must adopt a more holistic approach grounded in behavioral insights. Today, with the help of our industry-leading experts, one is still coming to the webinar, hopefully, we will explore how combining behavioral analysis, AI-driven insights, and real-time monitoring can offer organizations a more proactive stance, while also covering how anti-fraud vendors can enhance their products and marketing to address evolving threats and specific market needs. Now I will handle things to our speakers. So Steve, can you introduce yourself and tell us a bit about what you do?
Absolutely. Thank you, Ilmar, for inviting me to this event. I'm normally hosting and moderating these, so it's great to be on the speaking side. My name is Steve Craig, and I'm the founder and CEO of a company called Peak IDV. Peak IDV is essentially a media company. I help the digital identity industry to better understand really complex topics, and I do that through live stream events. I have a podcast series through content on LinkedIn. I also run educational cohorts. So when the KYC AML guide reached out to me and asked if I would participate in this, I was super excited to share my knowledge, and thanks again for inviting me on this. I've lost your, are you there?
Yeah, no worries.
Okay, and that was my intro.
It's a pleasure to have you. Yeah, something happened to my mute and unmute button. But anyways, let's go for the questions. If Max will join us, and hopefully he will. He told me that he will be just a bit late, so yeah, he will give an introduction later. But anyways, let's start with the question. So Steve, from your expertise and experience building identity verification products, which financial segments, whether fintech, payments, or crypto, do you see are most vulnerable to fraud right now? And what common exploit vectors are being used?
It's a great question. And to give a little bit of context on my experience in the space, I've been in digital identity for about 10 years. Early in my career in identity, I worked on product roadmaps to solve tough challenges and helping people prove who they are. In those early days, the biggest threats were around impersonation, or what's often referred to as identity theft or a third-party identity fraud, where someone is taking your information and just pretending to be you, and they would open up a bank account or a credit card, but eventually you find out and you raise your hand or you reach out and you say, hey, that's not me, and then it gets resolved, and it takes usually a lot of work to do that. But today, it's a lot more complex. Certainly third-party fraud is there, but the industries that are under assault, crypto as one. Crypto, if you lose your crypto, it's very hard to recover. There's often large sums of money there. So fraudsters and bad actors are often looking for ways to try to take over accounts. And they do that through social engineering or through poor practices with passwords. There's also a lot more fraud lately in the world of instant payments. And I do the podcast series. I've interviewed CEOs of companies where they talk about this concept of instant payments equals instant fraud. And fraudsters can be very lazy, but very efficient. So they go for scenarios where where's the quick hit? How can they quickly get the money from an unsuspecting victim to send them money via one of those networks, and then the money's gone. And in fact, maybe the account it was sent to never existed and they moved the money. I'm also seeing more fraud attacks on the buy now, pay later industry, made famous by companies like Klarna, because those systems don't have a lot of underwriting practices. In fact, they're meant to minimize friction. So we often see a fraud there because they want to help a checkout process, but they're not necessarily putting up all of the barriers to prevent both account takeover type scenarios, but also this concept of first party fraud, where it was really you, but you later claimed that it wasn't.
Mm-hmm. Yeah, thank you very much for that. Since you mentioned crypto business, and while Max is not here, I could also maybe share my own insight a bit. So being chief AML officer at one crypto company, I see a lot of, indeed, so-called pig butchering schemes is where fraudsters kind of exploit more relationships with their victims, or they kind of manipulate their victims into buying crypto and then sending to a disclosed wallet. It's really hard to track who is the owner of it and etc. And people just kind of lose their money in a way without much resolve. And also, you're right, in a way, they're a bit lazy in the sense that they're trying to, let's say, approach as many people as they can in order to just achieve at least some kind of fraudulent profit or illicit profit. But yeah, thank you for that insight. Let's go for the next question. Given the emerging fraud trends and tools to tackle them, how can solution providers tailor their offerings better for each segment? Let's say, what do solution vendors often overlook about buyers' real needs?
One of the biggest challenges I see in the digital identity space, and that connects to identity verification and biometrics and fraud detection, is the solution providers often try to take a one-size-fits-all approach. Mm-hmm. They want to minimize the effort to productize their offering, but they don't necessarily realize the different industries and different verticals and use cases have different levels of risk tolerance. There are different jargon, there are different regulations and rules. So the best thing to do is to really pay attention and become a subject matter expert in the field that you're trying to solve. And how you do that is, of course, research, going to conferences, getting education, but making sure you bring in people within your organization that are actual fraud experts. And one of the worst things you can do is claim that your product solves a fraud scenario, but then you don't actually know how the fraud works. And then customers buy your product and then they find that you're actually creating more fraud. So really making sure that you are bringing in those subject matter experts. Some of the best companies in the industry do that. They hire up teams that were former fraud leaders or that have dealt with these scenarios firsthand. And then making sure that you adapt, because you need to change your product. There's this verticalization that's happening of digital identity to be able to pursue certain markets. You can't just make your website say, hey, we support every use case and every vertical under the sun, unless you've put in that effort and done that work.
Mm-hmm. I believe there will be soon a question regarding the one size fits all, which is realistically the best way of approaching this, or any other issues. From my experience, from, let's say, a fintech professional, a lot of fintechs or any financial markets, banks, they're always looking for a verification solution that would offer, let's say, a good document verification, a good KYC screening, and on top of that, some biometric scan or behavioral analysis of the clients to offer more again, anti-fraud solution or detailed number or email scan. So which in reality is really hard to get. Most of the companies, they just invest in one side of their business in a way. It's really hard to be, let's say, a good jack of all trades in that sense. Okay, so next question. Since you were involved with initiatives like Deepfake Summit and the Identity Theft Resource Center, how should solution vendors adapt their product roadmaps to proactively address deepfake and synthetic ID threats?
Thanks for that question. And those are two organizations that I serve on the advisory board for, the Deepfake Summit, which is connected to the PRISM Project, and the Identity Theft Resource Center, which is a nonprofit that helps victims of identity theft to recover, also helps businesses that have had their business accounts taken over. And what those two organizations are seeing, and through my work with them, is there is a rise in more sophisticated attacks. You mentioned pig butchering. That's often connected to activity on social media of people creating completely fake profiles that look like real people because they have a photo of them and a name, and maybe they're even verified. But you have those challenges that are occurring. And then you have more and more sophisticated attacks on the financial institutions and the fintechs themselves, because today with AI, you can create entire people out of the thin air, out of your imagination. And it's not just a photo. It could be a video, it could even be a voice that you could create. You can also clone individuals. So unfortunately for you and I, Amor, being on a live stream with the training data we're supplying and doing this, someone can replicate us. They can replicate our voice. They can replicate how we look and sound. And so it's getting very challenging for the average everyday consumer to know if they're under assault. Are you receiving a call from someone you think is your family member that said they're stuck in jail and they need to be wired money, when it's not really them, it's a deep fake? Or are you at an institution where you're in a call center and you're interacting with someone on the phone that might pass a biometric voice check, but wouldn't pass a deep fake detection check? So these things are creating this environment where organizations have to have multiple layers. We know you can't just use an email and password. Having a second factor is great, but really having a strategy at the entire omni-channel of where the connection points could be, and then having vigilance as us as consumers, and educating our peers and our family members that, hey, these attacks exist and it's not science fiction. You can actually make them with pretty easy off-the-shelf tools.
This is indeed concerning, especially when you mentioned us doing the webinar and somebody could realistically replicate us. So yeah, I mean, but that's true. I mean, I've approached a lot of people regarding the webinars, and I mean, it's part of my like everyday job as well. And some people actually declined who work in the industry because they're kind of afraid of this outcome. So this is indeed a valid assumption. Again, since AI was mentioned by you, and for the past year or two, it has been rapidly a trend. In practice, how do you think can AI or machine learning be harnessed to spot fraud indicators that traditional systems miss, particularly around user behavior and transaction anomalies? Have you seen successful strategies where AI reduces friction while boosting security?
I have. There are many companies in the space that have invested in very sophisticated data science driven, machine learning driven capabilities. And what's really powerful about those systems is the multi-dimension nature of them. One of the challenges that humans have, and it's not everyone, some people are really good at it, is pattern detection. And as you mentioned, anomalies, being able to find those differences. And some of the best fraud leaders I've seen, they could look at data like you're staring at the numbers of the matrix, and they can see, hey, there's something off here. But not everyone is equipped to look at those dimensions. So companies that are able to take different signals and connect them and build both supervised and unsupervised machine learning models to detect those, and to do it at scale, and to do it at different points in the customer journey, from maybe it's a digital on the website, to maybe it's a mobile app, to maybe it's in the call center, connecting those interactions, looking at impossible travel scenarios. As an example, if you're logging in on one device and then suddenly you're trying to log in a completely different country on a different IP, it's like maybe difficult to connect those dots if you have disparate systems, but AI can help there. So certainly being able to use those tools, but there are risks to it. There are risks to it as well, because you have to comply with regulations and data privacy, and ensuring that your models and the different algorithms you use don't introduce bias, or they don't violate certain laws, especially in lending or other scenarios. So most companies are moving to an AI strategy, if not augmenting, if not moving to what I call AI native environment.
Yeah, that's pretty much true. You mentioned that there are some humans who can spot different patterns, let's say, but it's something that AI, in a sense, does better. Like some things human does, like thinking outside of the box or using more kind of like out of the norm imagination or some, let's say, abstract thinking, right? But in a way, in my day-to-day work as a AML chief officer, sometimes you have to go through like huge bank slips or for determining source of funds, for example. And I think AI would be perfect for that because you see so many transactions and patterns. So sometimes it's really hard to see the patterns or anomalies in those. But I think AI would be kind of better. But then again, some maybe behavioral aspects, or by talking to a person, figuring out that he's being manipulated into something, maybe it would require a bit more personal or human approach. So yeah, indeed, you are correct.
Yeah. Well, I follow groups like About Fraud or fraud leaders like Frank McKenna or Brian Davis, and they post really great insights about the fraud investigator journey. And for many of them, their career is built on analyzing logs or asking different groups around the organization to provide data so that they could retroactively piece together the digital story. And they're like detectives trying to figure out whether this was fraud from the customer or fraud from a third party. And these AI tools, I don't think they're there to replace those types of leaders. They're there to supercharge them, to make them kind of like RoboCops and augment their intelligence so they can move quicker and make decisions more rapidly, and not instead of weeks to adjudicate a fraud investigation, perhaps it's hours or minutes.
Yeah, totally true. I believe so as well. So let's see what else do we have. So there is this knowledge that AI driving tools are often only as good as the data they're trained on. How do we address issues of data quality or unpredictability of human behavior, including biases, to ensure robust, fair fraud detection?
Yeah, it reminds me of when I first started in the digital identity space. I worked for a company that was working on document-centric identity proofing. And at the time, the machine learning models, the computer vision models, a lot of it was built on classical template detection. And so we relied heavily still on manual review experts that were trained on how to review documents, but it still required them to be sent to a contact center, and you had sometimes one or two people reviewing. The same would happen with biometric review, an individual trying to match someone's portrait to the selfie that was taken. And that has certainly advanced. Now, the state of the art today is predominantly automated, using machine learning, using advanced computer vision models to do that. But those data sets were difficult to obtain because you want to protect driver's license, passport, ID card data. You don't want to have a honeypot of passports. So to be able to train those took time. And I think one of the things we're all faced with is fraudsters don't have those same barriers. They get hacked data. They don't care about GDPR. They're not worried about data sovereignty issues. They're not worried about provenance. They don't have legal restrictions. So all of these things make it an unfair battle between advances in fraudulent use AI and good use AI. But fortunately, the companies that are fighting the fight for good, they have often more resources and more people to join them in that. And so I'm seeing a lot of training programs be rolled out. I'm seeing frameworks like one from Max's company, Sardine. I saw just this last week, they rolled out an agentic AI framework on how best to use agentic AI within an organization that has regulatory compliance and requirements. So the best thing you can do is ensure you have training broadly in your organization, be an AI first type of organization, but also make sure that you are properly getting permission to use data, that you are labeling it, that you're destroying it. When you say, we've all seen the big news from companies like OpenAI, where they're being accused of just going out and web scraping any data available. There's talk about the Sora AI system being trained on YouTube data, which they shouldn't have done. So you really have to make sure you don't go too far out of that gray area. But at the same time, your data sets have to be diverse. You have to represent the broader population. You need to always be improving and measuring and making sure you're getting better, because one wrong decision, sure, it could let fraud in, but those wrong decisions also prevent people from accessing their accounts and financial products, and in some cases, things they need to do to survive. And so it's a really important challenge to tackle.
Yeah, really nicely put. It kind of feels like an uphill battle in a way, because fraudsters can kind of use any data that they can get their hands on, and while actually vendors are, I wouldn't say like restricted, because it's not the correct word, but still, I mean, they have to go through a lot of like requirements, like again, GDPR mentioned, or any other privacy concerns. So yeah, this is definitely a valid point that probably sometimes we should be a bit
Let's model governance that has existed prior to AI, ensuring that if you are using computer systems, expert systems, that when you're updating those, you don't inadvertently exclude certain populations. And so this has been a struggle with identity systems, especially early, matching selfies to documents. Certain populations had lower rates of success because they were not trained on ethnic groups, or they had challenges there. And so being able to invest to ensure equity and inclusivity in the technology is really important. But then know that the fraudster doesn't care about your ethnicity or who you are. They care about, like, is there money to steal, or is there some account they can create? So it's an unfair fight, but it's one I think we're winning.
There's also a notion that one of the ways to kind of tackle this is a deeper collaboration among banks, fintechs, regulators, that can lead to more like unified threat intelligence and better shared solutions. So the next question would probably more tackle dive on that subject. So what role do regulation and cross-industry collaboration play in curbing identity fraud, particularly for financial institutions that operate across multiple jurisdictions, which could be varied?
Regulatory frameworks are really important in our industry. It really pushes us forward, but regulations are often slow. They don't keep pace with advances in technology. They're often, once they're created, it's very hard to get them updated. And so we can't lean solely on the regulations as a solution. Even within that, there are often carrot and stick types of regulations. So in some cases, the carrot might be favorable tax scenarios, or might be some sort of benefit. Often companies might write those off as, hey, we'll just forego those. And then you have the stick side, where there are penalties. I think about GDPR as one of the biggest regulations in privacy that's happened in the last 10 years. And there are penalties to that. And many of the companies early on just chose to pay the penalty, knowing that they couldn't move at that pace. But over time, that's not a great business decision to just keep paying penalties. So I believe in regulation, but it has to be balanced with the public good, and not necessarily as a revenue source for different countries to know that people won't comply and they're just gonna, it's like an alternate tax. What I think is more powerful is the second part of it is like cross-industry collaboration. And sometimes that is through partnerships. So I track a lot of the developments in the space. And when I see two different companies team up and combine their products, I think that's a great way of cross collaborating. But what's really interesting to me is when I see broader consortiums. Again, our co-panelist here, Max, isn't on the line, but one of the things that I've seen from Sardine is the Sardine X platform, where they are combining data from different data sets of their customers. A company called Unit 21 also has something they call the FinTech Fraud DAO, which is a decentralized autonomous organization they're building. And then there are companies like Socure who have built their own internal consortium for their customer base to improve their models. I think when the banks and the fintechs realize that, sure, they're competing for customers and accounts, but if they combine up data, if a fraud attack happens at one neobank fintech and they're on a shared network where there's knowledge, it's going to make it easier to catch the fraud attack before losses escalate elsewhere. So I think those are really important. And then we've seen cross-government collaborations. I think those knowledge sharing frameworks It's particularly more common in Europe, where you have so much economic activity through borders. You take a train into another country pretty easily. I think those types of collaborations are important for making sure that that data is accessible when you're doing background checks and KYC and other things. Otherwise, the fraudsters can just slip through different countries and get away with it in another place.
Yeah, for sure. And also, yeah, I totally agree. It's a sad thing that Max probably has some like technical difficulties, so he couldn't join us today. Most probably he will join us next time, because I had a lot of behavioral specific questions, since Sardine AI, his organization, is one of the kind of pioneers of this approach. But since you are basically an expert in identity verification solutions, so what, in your opinion, how accurately do you think we can actually fight fraud by getting the identity verification and screening right? Because in my, at least, experience working as again, AML officer or through a partnership with a variety of fintechs, it's not the sole little thing that can actually fight fraud. It can definitely fight something like sanctions or warning lists, but fraud itself, usually you have in your organization like a blank state, like a totally regular person, but he's being like manipulated, or his identity was stolen from him. So like realistically, what do you think? Can we fight fraud by getting the identity verification right, or do we need to do something additional as well?
One of the trends in the last 10 years has been this movement from only doing the KYC or IDV at the front door to doing it more continuously. The middle ground, I'd say, is to have step-ups when there are high-risk scenarios, like transferring large sums of money, or maybe even logging into a new device. I often see that as a step up. But building systems that can be passive, invisible, and still create high levels of assurance that that person is still using their account and it's really them is really important. So when it comes to behavioral, it's often very difficult for a company to know the behavior of their consumer if they're a new consumer. So you need to use traditional methods, perhaps document-centric methods with a biometric, or maybe using a phone-centric or device-centric with a connection to the telco, or even data that can be done through an identity graph. But once that consumer has started to interact, you can quickly build a profile, not just against the device itself and parameters around the device, but how they use it, how quickly they key in information, whether they are left-handed or right-handed, how do they navigate, what are the approaches they take to get transactions done. And those profiles can build up over time. So when there is a scenario that is an anomaly, or it's out of characteristic behavior, additional step-ups can be invoked. And you can do it in a way where you can match the level of risk. Like, let's say you're logging into your account to change your bank payout credentials. It's a bit higher risk than if you're in there just updating maybe your address or some other scenario. And so being able to match those, there are many companies that have models around those changes. And so just like you would log a user journey in Google Analytics, you can log those journeys of how a product gets used. So I think behavioral at its core is a really powerful signal. I think it would have a challenge to stand on its own as a standalone company. So we've seen companies like NeuroID be acquired by Experian. We've seen Behaviosec be acquired by LexisNexis. BioCatch is out there, is still a standalone company, but they diversified the suite of what they offer. So for a company like Sardine using behavioral, it's part of a larger suite of different capabilities and signals that can be leveraged in that continuous identity journey, not just in the KYC or IDV up front.
Very well put. But again, continuing probably this question, do you think we're moving towards a more unified full stack solution, or will niche specialist vendor continue to thrive? What is currently missing from a successful product to effectively fight against fraud, in your opinion?
When I speak with buyers, those that are practitioners of these technologies that are leveraging them either in financial services or maybe marketplace, they ask this question. It's the classic, best of breed, where you're combining them, or is it one size fits all? I think the question is more about single signal, multi-signal, and then within that, can you get a single provider that can give you those various signals? So just from what we've discussed today in 2025, you need to have a multi-signal strategy. And so if you want to minimize the number of vendors and solution providers and the connections and the risks that come with that, then look for those that have multiple signals and make sure that they are experts in those various signals, and they're just not bolted on, or they're not roadmap in development. But if you are a larger organization, it may be a great business decision to be multi-vendor within those multi-signal. And what that gives you redundancy, gives you a bit more negotiating leverage. It gives you a little bit more sort of maneuverability when you're looking at new use cases or new scenarios where you'd use that technology. I still think there's a place, and I see very successful companies that are good at just one thing. Maybe it's deep fake detection, or maybe it's biometric template protection. But as the space grows and as companies look for more revenue and more growth, they will go horizontal. So it really depends on the stage you are as your organization. If you're a fintech just getting going, probably is not going to be the best use of your time to have multiple vendors. You want to go for one that serves all. If you're a larger multinational organization that is serving different regions and dealing with different data sovereignty rules and different regulations, and you also have different fraud and risk profiles, and you have a large volume of transactions, like, you may be best served by engaging with multiple vendors, so you have that redundancy. I think that'll continue to be a trend. I don't think we're going to have this Pepsi and Coke world where there's just two companies that are providing digital identity services. I think we'll continue to have a bit of fragmentation, because that fragmentation creates innovation, and we need that now with the pace that we're seeing with change.
Yeah, I mean, even if we're taking only verification or ID verification, there are many ways to actually do it, not only taking a photo of the document or your own selfie. And like, if we are going to continue this thought, there are maybe some authentication methods that are considered like maybe more safe or more fraud proof. But like, in your opinion, what would you consider the safest option for, let's say, identity authentication, since we probably have a lot of specialists working in the banking industry or fintechs, they would be probably quite interested in what is your opinion on that? Like, would facial biometrics be one, or maybe some verification through your chip on your ID card or something similar?
Yeah. Well, let me start by saying the two things you shouldn't do. One is use knowledge-based authentication only. Those are the security questions that get generated based on your financial history or your digital trail, because we all know that those are easily spoofed, and the fraudsters often have that data more. You probably would be surprised or not surprised the number of companies that still rely on that as their primary or only form of IDV is a KBA question, which, don't do that. The second is to move away from SMS-based OTPs, where you're solely relying on the consumer to read off that number. Now, there are some more sophisticated SMS OTP services where they're actually triangulating against that device, and there are other behind-the-scenes things they're doing. That's stronger, but just relying on that one-time password to be sent, those things can be intercepted. They're socially engineered. So don't do those two things. But what you can do is take a multi-signal strategy. I still believe that document verification has a place, especially with very advanced forensics to detect if it's been forged or changed. But you need to pair that with biometrics. And when you pair it with biometrics, it's not just matching, but understanding if this is a live or genuine person. And then more and more, you need to have that level of looking for the deep fake generation. Is this a synthetically created picture or video of this person? You now need to have that layer. So matching the liveness and then making sure it's not been generated. But layering in other capabilities around the device, the history or detail of that person from an identity graph standpoint. The most known triangle of security is what you have, what you know, and who you are. The what you know has been passwords and KBA, so it's a little bit weaker. But combining that, what you have, that device, along with who you are, which could be facial biometrics, could be voice biometrics. A lot of devices, especially in the Android ecosystem, have fingerprint readers, so the fingerprint is still valuable. Having a multi-pronged strategy is the strongest. Having a single point of failure is, it's going to lead your customers down a path of pain.
Okay, fair enough. So looking ahead, how do you see the landscape of fraud evolving over the next 2 or 5 years? What are the must-have elements for financial institutions looking to stay ahead of these new threats? And since you mentioned, let's say, deepfakes, I mean, there could be a notion that at one point they would become so sophisticated that even like AI solution wouldn't be able to kind of differentiate if the document or video is like forged by AI as well. How do you see this kind of bleak outcome in a way?
Yeah. Well, we're seeing this unfold right before our eyes daily on LinkedIn with the fun graphics people are making of themselves in cartoons, but it just goes to show the power and how quickly AI is accelerating. I was playing with some tools on GitHub that don't have any governance or checks and balances. You download them and you run some command lines and you use your computer to create face swaps. I think as a fraud and risk leader, as a financial institution, you have to acknowledge that we are now in this era of synthetic media that is indistinguishable between a real Zoom call or not, or even certain scenarios of kind of voice conversation. The real-time nature of it is nearly perfect. And so realize we're already at that stage, but also realize that this doesn't require a PhD level knowledge of AI engineering. You can go out on the web and find any number of tools that can create these. A lot of the tools have some governance. They require you to make statements about confirming it's your identity, and they will ask you to at least confirm that you're not going to use it for certain purposes. But all these libraries that are in repositories that you can download, there's no governance there. So first, acknowledge the threat. Next, you have to think about, and this is something that I learned from a chief AML officer, is you have to think about the attack vectors. You have to put yourself in the shoes of that fraudster. It's that red teaming approach where you have to look at your journeys and understand where are all of the different places where these attacks could occur. It's not just with the identity document and the selfie up front. It could be at various touch points throughout the organization. So thinking through it in an omni-channel way, and then you use the tools that we've talked about. So you have to have an adaptive risk strategy. You have to make sure the level of friction you're applying matches the level of risks. You don't want to lose customers and business. But having behavioral biometrics, having biometrics against a face and a voice, being able to build models with your own internal data, but also participate in consortiums. When it comes to the bleak nature of what happens if you can't prove it, it's just you look at the person and it looks exactly like them. We have to start to lean on some of those what you have capabilities. So I'm seeing some interesting companies emerge that are putting tokens and other advanced things on devices. The passkey ecosystem put out by the FIDO Alliance is really flourishing, because passkeys also offer another strong what you have, the device you've done that passkey against. And when you have a potential social engineering attack, you need to make sure your frontline team members are trained to spot those and realize they can happen. And then make sure you have different paths that are of higher and higher levels of friction to resolve them, right? You can't just say, well, call in the call center and we'll just fall back on KBA, which happens. Like I've had that happen to me where I've had to just answer some questions to get access to my account. So everything's going to be very dynamic. Looking ahead, digital identity is going to evolve further into some of the things we haven't gotten into around digital wallets, reusable identities, mobile DLs. But we're going to move to a future very soon where you need to know the agent. The agentic AI systems will be transacting on our behalf. Like, how do I know that this agent is really working for you, Amar, not working for a fraudster? So all these things are going to create a lot of pain in the ecosystem, but lots of opportunity to fight back.
Yeah, great way to put it. And I totally agree. We cannot really predict how it will play out. I mean, we're already living in kind of like a Web3 era, and who knows how blockchain could also affect the way people and consumers authenticate themselves. It could be also one way of fighting fraud, or maybe any other kind of lesser less predictable ways could also emerge basically any month from now. But thank you very much for being here. It's really sad that Max from Sardine AI couldn't make it for this webinar. We were really hoping he would also take part. We prepared a lot of amazing questions on behavioral approach. But thank you very much, Steve. I think you're doing a great job, and definitely ID verification would still be a huge player in all, let's say, AML field and how fintechs actually communicate with their customers. I don't see at any stage in the future it's kind of going anywhere, basically. It will just continue evolving. So many thanks for what you do, and many thanks for our listeners today. I hope you definitely learned something new. Fraud is definitely a hot topic currently for any ML specialist or fintech providers. Thank you very much for being here, and it was a pleasure to having you on this webinar. It's sad that we need to cut this a bit earlier, but thank you everybody for joining us, and have a great day ahead. Thank you, Steve.
Thank you. Bye.